Hey guys, Boris, BK Forex. Welcome to the Weekly Technicals for September 9th to September 13th, 2019 for the majors for Euro dollar, dollar yen, and pound dollar. The big story next week or this week will be the Euro story because we have the ECB meeting middle of the week, and it's really a big question of just how much of a policy response they're going to make to the clear deterioration of economic conditions in the Eurozone, where we're now teetering on the brink of recession essentially all across the major Eurozone economies, and especially Germany, which is really the driver of growth in Europe. So the levels in Europe now, or the levels in the majors now, have actually sort of, ironically enough, stayed the same as last week. But now, instead of testing the upper end, it looks like we might be testing the lower end at the support of the 109. So it's 111, 109 trade in euro dollar. Yen inched up a little bit. We did break the 107 figure. That was first time we've broken the figure in I think a couple of months, and that's a positive move, but couldn't quite hold it post the non-farm payrolls on Friday. So that's going to be a very big watch area. If we can push through to 107.50, that really confirms a strong dollar turnaround and essentially that double bottom off the 104s and perhaps an extension all the way out to the 110. So we'll take a look at the charts in a little bit. And then, of course, cable becomes still very much the political story. There's a lot of economic data as we'll see on the charts, but none of it really going to be that much. It's going to be very much the story of, number one, can they seal the deal on preventing Boris Johnson from unilaterally dropping out of the European Union? That's going to be a bill coming up on Monday. And then after that, of course, the tussling and the political jockeying over whether they're going to do a no confidence vote or not. So that's also very much worth watching. It's really, of course, it's always going to be a political driven headline. This 124 level in cable, very key big figure that everybody's watching as a recovery figure, essentially a sigh of relief that hard Brexit is not going to be the reality for UK as we go forward. So when we look at the calendar, it's very major centric this week. So almost no data except for the majors. On the major side, we have the UK industrial production on Monday. Everything is going to be bearish. The UK economy has certainly essentially entered into a recession or contraction this quarter, and if we have another quarter of contraction, it'll be a full-blown official recession. But for now, it's clear it's certainly contracting in manufacturing. It's on the teetering edge of contracting in services. It'll be interesting. We're bearish both data sets here: the IP and MP on Monday, the claimant count on Tuesday. Although, ironically enough, employment in UK has been far more robust and resilient than most people think. But still, the data here is pretty unequivocal. Manufacturing has been down the most in 6.5 years, and some employment grew the slowest since May. So unlikely that we're going to see some upward surprises here. Regardless, that's going to have very little impact on the pound if the political story proves to be benign. That's really the key story with UK as we go this week. Then into Wednesday, we get the UK PPI, US PPI data, which possibly could be a little bit bullish, but really immaterial. At this point, I think the conventional wisdom, which is pretty much set in stone, is that the Fed cuts 25 BPs this month, not 50, doesn't stay stationary. And so all of this data is sort of immaterial. The US economy continues to hobble along at a much better pace than almost everywhere else, but much slower pace than what it was doing even 6 months ago. And that's good enough to keep the Fed modestly dovish, but not aggressively so. And I think that's the takeaway pretty much everybody's operating on at this point. But the big event Thursday, ECB presser, everybody going to be watching to see what, if any, bag of tricks Mario Draghi is going to bring to the table, because clearly the European economy very much in a deep funk now, especially affected by the trade wars and the slowdown in just global manufacturing activity. All of that taking a massive toll on export-dependent Germany, which in turn is then dragging everything else around it down. So I think they understand and appreciate the existential threat to them at this point. The question is what kind of a policy initiative they're going to do. The market really anticipates softer response, and it'll be interesting to see, actually, because I think the ECB has a history of sort of just being too slow and too unresponsive to market conditions. So if they don't really sound that dovish, you could have a knee-jerk short covering move in the euro. But prior to that, I think the anticipation is that the euro starts drifting lower as we try to test this 109 level. If they come out full guns blazing with QE infinity, with more more monetary stimulus, it's very likely euro can retest and break those lows at 109s. And then Friday we end up the week with U.S. Data. Retail sales really the key event here. The retail sales is important in a sense that we have decent wage growth. Has that translated into decent spending? And so far the answer is no. So that's what the market is going to be looking for. Is the U.S. consumer feeling confident enough to really spend? And the thing is that there's a lot of very, very divergent signals, especially from the U.S. sentiment data, including the University of Michigan sentiment data, which has been bearish for quite a while. So even though the consumer may have more money, they may not be feeling positive enough to want to spend it. So we'll be watching that very carefully on the retail trade side, because that could have a material impact on where the dollar yen is by the end of the week. It's really, the dollar yen is going to be struggling 106.50 to 107.50, barring absence of any additional political headlines, which is, of course, like saying barring the absence of breathing at this point. So be that as it may, let's take a look at the charts. Here's what the charts are showing us. This 111, 109. What's interesting, of course, here is a really, really big rejection of the 111. Still very much a series of lower lows. I mean, this is classic downtrend action. The only salvation I think you can take out of this thing is that if we kind of just drift down to 110 and hold it over there, don't really move down, that could be the first inkling of a bottoming formation. In other words, that the euro may just simply not. If it doesn't take out the lows here, that actually could be the first sign of a long-term turn in the euro. And we'll have to figure out what the reasons for that will be once and if that happens. But for now, the price action certainly angling towards the 109.50, 109s, and of course a break here really takes us towards the 105 lows as everybody watches. Overall, it's been a consistently strong downtrend with some consolidation and very, very mild counter trend rallies all the way through. And this was the big sharp drop last week. And then, of course, this week's mild reversal, they got badly rejected. The fact that we got badly rejected and now moving down, I think, suggests certainly 109.50 at minimum as a target for euro. Cable doing a lot better. It's got rejected a little bit at the 123s. The big question here is, do we get any positive, more additional positive flow on the Brexit news? And if we can do that, I think it has a reasonable chance here to reach for 124s, which is pretty much where I think it caps its Brexit relief rally at this point. But certainly, what you see in cable for now is relief over the political existential threat. The 120 held. If we're going to do anything, we're going to bounce around here until we get a little bit of clarity as to what goes on. There's, of course, an external chance that the European Union may not extend the Brexit deal, which I find that to be highly unlikely. There's almost zero chance the Europeans are not going to extend it to them if they can just simply delay the carve out. And all that suggests basically, I think, over the next couple of weeks, a consolidation and a possible test of the 124s over here as we go forward. Only a truly strong Lib Democrats showing in the polls that convinces the market that the UK the population may actually turn against Brexit could really push this much higher. Other than that, I think 24, 25 is pretty much the full relief rally extent of the cable rule. And the yen story here, we did take out the 107s, couldn't quite hold it, but still holding okay. I mean, we held the 106.50s post NFPs. We'll have to see if the trade. It's really at this point. I think actually yen is much more of a trade story. There was a great article in Barron's this week from Jans Norvik, who's a very famous FX currency strategist, who's actually arguing that dollar yen will fall, yen will strengthen because global slowdown always correlates better with strong yen, which is definitely true. Carry trades gets unwound, so there may be just very limited amount of upside here, but I do think at least a secondary test of this 107.25s, 107.50 level certainly do, unless we just really start to, if we take out the 106.50 and just start drifting towards the lows, then yeah, this was the top, and it was another failed top in the yen as we continue to consolidate. Does not mean I'm uber negative yen. I still think this 104, 105 very much holds, but it just shows that there's not enough juice here right now to push the trade into the 107, 108 zone, which is really where it needs to be in order to kind of establish a stronger uptrend rather than just a consolidation trend, the bottoming trend that we've seen so far. So that's how the week shapes up. Euro primary look as far as event risk goes. Cable, of course, the political story, and yen is a story on China trade headlines and a possibility of a retest of the 107.25's highs from last week. Wish you guys the best luck, the best trading. Boris Landsberg, over and out.